Hi, I'm Jim Juback, and welcome to my YouTube video for Wednesday, October 5th. I don't know what your weather's like. Ours is kind of nutso. Instead of getting the tail end of Hurricane Ian and warm rain from the south, Ian moved over the Appalachians, stalled, and we got a nor'easter, so we've got low temperature and rain coming in from the north, and it's kind of wacky here today. All right, anyway, enough meteorology. Today's topic is to turn a bounce into a bear market rally, we need two things. Now, remember, if you like this video, please like it, thumbs up, subscribe to my YouTube channel, because that way you'll get notification when we're doing other videos. We're doing about 3 a week, not always on the same day. And if you subscribe, you get notification when we do the next one. If you want more of my stuff, including 3 portfolios, you can go to my free site, that's jubakpicks.com, or my paid site that's got 6 portfolios, including some ETFs and some inverse plays and some bearish market moves. And that's my paid site, which is jubakam.com. Links to all that down below. Okay, so on Monday, here's what we got. We got a huge bounce. The S&P was up. Well, let's look at a chart. This is the S&P. The S&P up on Monday, 259. You can see it's zooming, 2.59%. The Dow was up 266. And this is the Nasdaq up about 2.27. On Tuesday, same continuation of the same pattern. Bonds were down again. 10-year Treasuries, which had risen to almost 4% last week, are down to 3.5% today. Oil is up again about 1%. And as of noon on Tuesday, the S&P was up 2.68% and the Nasdaq was up 3.11. Okay, so how do we turn this bounce, which can take a couple days, into a longer-term rally, which might go as far as the end of the year? It would still be a bear market as far as I'm concerned, but you do get rallies, strong rallies in bear markets, and that's what I'm looking for here, trying to figure out when that might happen. So one of the things is that we need good, that is bad news, for the jobs number that's coming on Friday. In August, unemployment moved up to about a 3.7% rate from 3.5% in July. If we get a continuation of bad news, as unemployment moves up, the economy creates fewer jobs, that's going to encourage Wall Street to fall back on its favorite bull market rally thought, which is that, hey, the Fed is going to stop raising rates sooner rather than later, and therefore we should buy. Second thing we need, this is coming on next week, October 13th, is we need good inflation numbers. These are not going to be good in the sense of down at 2% again, but this is the CPI report on Friday, October 13th, and what we're looking for is a continuation of the trend toward down annualized inflation rates, headline inflation. In August, we were down to an 8.3%, which is down from a high of 9.1. If we get another step down in September, again, the market will say, hey, the Fed has got inflation under control. Interest rates look like they might not go up as much as we thought. Maybe we get the story is that maybe we get one more big interest rate increase in November, and then the Fed will go on vacation. I think that's wrong, but I think this is the logic that would drive an end-of-the-year bear market rally that you might make some money in, and that you should also watch that you don't get over-enthusiastic and commit money that you're going to get dinged on when the bear market resumes in 2023. Thanks for watching. This has been Jim Juback. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we're doing the other videos. If you want more of my stuff, stock picks, 3 portfolios for 12 to 18 months, 5 years, and dividends, you go to my free site, that's jubakpicks.com. If you want 6 portfolios, including some ETFs and options and bear market plays, you go to my paid site, that's jubakam.com, and you find all that stuff down below. Thanks for watching.